So the Forex market is considered more of a consolidative market where traditional stock markets are considered more directional. Trend continuation trading or trend following is often seen as the path of least resistance, and it's the common path that many traders take when they get into investing and trading. So the question is, how or should I be a trend following trader in the Forex market, which is highly consolidative? Let's discuss in today's episode of the Trading Coach podcast. I wouldn't say, that's a good question. Read it one more time. So, may sound stupid, but if the Forex market goes sideways, most of the time, it seems obvious that a trend following strategy may not be the best strategy for Forex. So the question is, what strategies are more successful in Forex? And this is a multiple level kind of answer because, again, so when we talk about success, are we speaking of success from a profitability perspective, or are we speaking of success from a win-loss perspective? Because I'll tell you a story about the turtle traders, right? These were turtle traders, Richard Dennis. I always forget the other guy, I need to remember. I always remember Richard Dennis. It was an experiment basically saying that if we give traders a system, they can be profitable with no real knowledge of trading, blah, 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 blah. But anyway, it was a trend following system. And in most trend following systems, you're not going to have a very high win percentage. It's you're shooting a lot, but only hitting your target a couple of times. So it was quite common for those traders to have win percentages in the high teens or the 20s, meaning that out of every 100 trades they take, they win maybe 20 of them. So you can look at that in two ways. You can look at that and say, man, you only win 20 out of 100 trades. Like, you're losing a lot, right? But if those 20 wins make up for those 20 losses, right? Because they are big wins, right? The average risk reward is incredible, right? 5, 6, 7, 10 to 1. It's a very profitable system. So you can say the same thing kind of relating to your question, right? Where the market may be in consolidation most of the time, and that can cause you to take loss. But if you're able to catch the few times that it breaks out, and there are breakouts that go for hundreds and hundreds of pips, it can actually be profitable, right? So you can certainly be profitable being a trend following trader. Another dynamic inside of that, and this is kind of more so how I trade, you can be what's called, I've never called it this, but I'll call it this for the first time, a short-term trend following trader, right? So typically a trend following trader, if you think of like the traditional trend following traders, you're latching on like a big trend, right? You're catching this move and you're riding the waves, the ebbs and the flows, and you're holding on until it goes way up in your favor. Well, you could be a trend following trader with a kind of a very short-term target where you're trying to catch extensions, but you're not holding on to those extensions for long periods of time. You're only holding on to those extensions to, let's say, the next level of importance. So that way you can be a trend following trader and catch a trend, a short-term trend within a bigger period of consolidation, right? So there's different ways you can go about it. And this is coming from someone who is a counter trend trader. So I'm with you, right? I like counter trend trading. I like to be in and out, but eventually I added a trend continuation style to my trading because I wanted to catch the moves that I couldn't catch before. But because I have that counter trend nature, because I don't believe in buying and holding in the Forex market specifically, right? And investing, yes, obviously, but in trading, no. I created a trend following system that is still in and out where, yes, I would like to catch the extension, but half my position is coming off at a retest of structure. The second half of my position is coming off at, again, the first predictive level of where I think price is going to go. I'm not looking to kind of hold it and absorb a retracement and then catch the next extension, then absorb the next. No, I don't want to absorb any of that. I want to get out. I'm a scaredy pants, right? I want to get out. As soon as the boogeyman comes out, I'm going to take my money and run. Picturing me like a cartoon character running with like money in his pocket. I'm just leaving, right? But I hope that explains, and it's not a stupid question at all, but does that explain the kind of how it can work? Because the truth is, you got to remember the market moves in fractals, right? So there's always, within consolidation, there are smaller trends, and within those smaller trends, there are smaller periods of consolidation, and within those smaller periods of consolidation, there are even smaller trends, right? So you can be a trend following trader that still takes advantage of consolidation. That's a very good question. But your traditional, I would say your traditional like buy and hold, it's going to be tougher. I do think in the Forex market, I think you do need to have a destination. I think you do need to have a point in the market where you say, okay, this is my max expectancy. Like, I don't think the market's going to go past this level. So if we can get there, I'm taking everything out. I think if you're playing the buy and hold game where you're trying to absorb every ebb and flow, eventually you're going to get got, right? Eventually the market's going to correct and you're going to get half your profit sucked dry. So I do think you have to be a little bit different with how you go about it versus like buying and holding Microsoft or Disney or something like that. Hope you guys enjoyed the episode. It's always hard to kind of talk technicals on an audio-based program, but if you want to learn more about technical analysis and how I trade, I recommend checking out our platform, www.tier1trading.com. Our educational platform includes a lot of stuff: live sessions, accountability sessions, private Q&A sessions, a lot of courses, a lot of supportive resources, more than you can ask for. Check it out, www.tier1trading.com. Start with the 14-day risk-free trial membership. That way you can test these things out before making any type of commitment.